Hello, everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I am your host, Stan McCune, realtor, right here in the upstate, and you can find all of my contact information in the show notes. I always put it there, assuming I remember to put it there. But you can also Google my name, Stan McCune. My name is everywhere. My phone number is everywhere. I get spam calls all the time because all these different bots out there are scrubbing the web for different phone numbers. And unfortunately, I have to advertise mine. And so guess what? I get a lot of calls. It doesn't take too many searches to find a way to contact me. And however you want to contact me, feel free to text, call, email. I have people Facebook message me. I have people LinkedIn message me. I mean, the full gamut. I'm available. And also just a reminder, as always, if you enjoyed this podcast, please go ahead and subscribe, leave a rating and a review. I really appreciate when you guys do that. It really helps encourage me to keep the show going. And I appreciate it every time I see one of those. We're going to be talking today about some insurance gotchas, specifically when it comes to homeowners insurance. There is a lot going on in the homeowners insurance world, and we need to I need to update all of you guys as to what's happening. Now, I had an episode way back, like a year ago, where I covered a bunch of different aspects of homeowners insurance that I highly recommend you listen to. It really covers just a variety of things that I'm not going to cover in this episode. I might overlap a couple things from it, but I highly recommend you listen to that. But for this episode, I want to talk about some of the things that are changing and some of the things that have changed recently in the world of homeowners insurance that you might not know about, and that could be kind of a gotcha moment if you don't know about them. And just as a warning, you need to always read your policy. Read your policy so that you know what's in it. The language is very specific. And I promise you, if you read your homeowner's insurance policy, you will learn something. There will be something in there that is covered or isn't covered that you didn't know. And oftentimes you'll find some pleasant surprises in there. You'll find some things that's like, oh, well, I didn't know that would be covered if that happened. And so it's really beneficial to review your policy every now and then to make sure that you know what is actually being covered, what you're actually paying your homeowner's insurance company for. But the homeowners insurance companies, the carriers as we call them, they exist for one purpose and one purpose only. And that is to make money, right? They are companies, they are corporations, just like several any others that we know out there. And so they exist to make a profit at the end of the day. Nothing wrong with that. They're providing a service to make a profit. But guess what happens when things change in terms of the amount of claims that they're getting, or in terms of new risks that are posed to them that end up causing them to lose more money? They will change how they handle things. They will change their policies in order to ensure that they are insured against having to spend tons and tons of money. And so they will do things that benefit themselves that don't benefit you. And so I think it's worth bringing up a few things that I've noticed lately that I think are particularly important for our area. Now, one thing that is common in the insurance world for places that are near storm centers. So, for instance, if you live on the coast, if you live near the ocean, it is very common that they will have a percent deductible for hurricanes, tropical storms, any named storm. That's usually how the language is worded in your policy. Again, if you live on the coast, look at your policy and double check that. And if you don't live on the coast, double check it, because I'm about to explain why. But they will have a special deductible that is just for named storms. And it might be in addition to the deductible that you already have. It might be its own special thing. Oftentimes, it is a percent deductible. And here's what that means. If your house is worth $500,000 and you have a 2% named storm deductible, a named storm comes through, tropical storm, Boogla Boogla. I could barely even say that. Tropical storm, Boogla Boogla, comes through and causes damage to your house, your $500,000 house. You have a 2% named storm deductible. Guess what? You're going to have to pay the first $10,000, 2% of $500,000. You're going to have to pay the first $10,000 of your claim before your insurance gets involved. So if you have a $15,000 claim, your insurance is only going to pay you $5,000 because they're going to subtract the 2% right off the top first before they pay out anything to you. Well, guess what? This is starting to become more and more common even in non-coastal areas, but specifically here in the upstate, because we have had so many wind, hail, tornado storms in our area, and some tropical storms, and not so much hurricanes, because usually they're tropical storms by the time they come here, but just named storms in general. And what we're starting to see is now some of these insurance carriers are actually starting to require for any named storm or even a wind or hailstorm, now that deductible that you used to have that was like $1,000, now it's a percent deductible. And that can be anywhere from 1% to, I've seen 10%, not in our area, but I've seen it up to 10% before. It's crazy. And that's a major change. If you get a hailstorm, on a very expensive house and you have a 1 or 2% hail deductible, I mean, you could end up having to pay almost the entire roof out of pocket. Your insurance might not cover hardly anything with regard to that roof. Now, this is a really important development because not that long ago, insurance companies in our area would allow even deductibles as low as $500. And even before that, sometimes as low as $250. That was not as common. But not that long ago, I had a homeowner's insurance deductible of $500. That is almost non-existent now. Almost always, at least the minimum is $1,000. And now we're starting to see that some of these carriers are now not on everything, but on some types of properties and in some certain areas, they're now starting to require special wind, hail, named storm, etc. deductibles that are in a different bracket, a percent deductible, rather than that set, okay, you just pay the first $1,000. You need to be very careful to make sure that you know what your policy, what your homeowner's policy says, because they may have made that change recently. Some of them are starting to make those changes now, and that is really significant. If you can get a policy, I would pay a little bit more per year for a policy that has $1,000 flat deductible more or less across the board, versus paying just a little bit less for a policy that has a 1 or 2% or whatever the case may be deductible for wind and hailstorms, because we get a lot of wind and hailstorms in the area. Another important development, increasingly insurance carriers are starting to put special exclusions in their policies for roofs that have what we call 3-tab composition shingles. So if you look at a roof, you'll see basically two main types of shingle roofs. One is the classic architectural shingle. And that's really, at this point, I feel like in the upstate, the majority of our roofs do thankfully have those architectural shingles. But the other one is the 3-tab shingles. And these are the ones that they look like long horizontal rectangles that are just placed throughout the roof. And they don't really overlap. It's just like a flat type of roof. Well, a lot of roofs that have the 3-tab shingles have just been completely destroyed by windstorms. They also don't hold up very well against hail. They really aren't a good roof product to begin with, but they're a little bit cheaper than the architectural shingles. So you'll see people that are built, not so much builders anymore, although it used to be the case, but more people when they get their roof replaced, sometimes they'll get a little chintzy. They'll try to save themselves, $800, $1,000 by instead of getting an architectural shingle, which, should last for up to 30 years, they'll get one of these 3-tab shingles, which is supposed to last significantly less than that 30-year mark. But regardless of what it's supposed to last for, they do not hold up well against the elements. I have seen this because I used to be an insurance adjuster. They don't hold up well against wind. They hold up terribly against wind. They don't stick very well to the roof itself. And so you get a sustained gust of wind, you get a tornado nearby, those shingles are going to start flapping. And what happens then when they start flapping is it can permanently damage the shingle. Additionally, as I already mentioned, they don't hold up very well against hail. It's not a good shingle. If you replace your roof, get a 30-year architectural shingle at least. I mean, you can also get 40 and 50-year architectural shingles if you really want to. But definitely get some type of architectural roof. And if you have a 3-tab shingle on your current roof, make sure that there isn't some kind of exclusion or special provision in your policy that would hurt you if you get a wind or hail claim or something similar to that for that roof. That's something that we're starting to see more of as well. Here's something that is kind of on the positive, I guess, end of the spectrum, but something to just keep in mind. So due to the fact that there's been a lot of protests over the past couple of years, at least I should say they've been highly publicized. I don't know if there's been more protests the past couple of years than in the past, but they're getting a lot of television time. And so now some insurance companies are now offering some protection of property coverages. So if there is imminent risk of civil unrest in your area, you may actually be eligible to protect your property. For instance, boarding up windows or that type of thing. If you're in an urban environment that is at risk of civil unrest, you may be eligible to do some things and to protect your property and be reimbursed for that. Some insurance companies are starting to do that. There may be other aspects of that are covered. Really, at the end of the day, they're implementing that strictly because of the protesting, but they can't say that. That's not really allowable for them to just say, due to an uptick in protests, we are now encouraging people to board up their windows. So they'll add language like, for instance, if you have an excess amount of snow or ice on your roof, you can, if you show evidence of that and you take extraordinary measures to ensure that your roof doesn't collapse because it might have so much ice and snow on it that it might actually be risk of collapsing. You take measures, you spend money out of pocket to get that off the roof to save your roof, you could be eligible for protection of property coverage. Down here, there's not a whole lot of options there, or not a whole lot of risk in terms of snow or ice or whatever the case may be. But if anything ever happens, if you have a tree limb that falls in your house or whatever, or if you do have damage to your roof, you need to immediately take action to protect your property. If you don't, then you're liable potentially for any damages. So if you ever have that happen, if you ever have a storm-created opening in your property and the potential for water coming in, get a tarp on that. Call a roofer, get that tarped up. Even if you might want to call your insurance company first. I would recommend that. But even if you're having a hard time, getting your insurance company to whatever, shoot you straight, give you answers that you want, if you don't protect your property, you are opening yourself up to your insurance company denying you coverage, and you don't want to do that. By the way, while we're on the topic of roofs, be very careful when you're up on your roof doing different things. There are some companies now that will try to advertise like pressure washing roofs, and sometimes people that have roofs that are under trees, sometimes you'll have some little fungal growth on your roof. That fungal growth is a bad thing. So trim your trees back so that doesn't happen. Okay, that you could have your policy have a homeowner's claim excluded because of that. But if you get up there and you start like scraping that, algae or whatever moss off your roof, or you pressure wash it, or you get one of these companies that are pulling, that one of these roof extension type of things where they spray something on the roof that is supposed to extend the life of the roof, you are taking so much risk that your insurance company will not cover your roof in the event that you have future damage. Yes, even if you're trying to do things to help your roof, at the end of the day, an insurance company is going to see that as you tampered with the roof. The insurance is there to insure a normal roof that hasn't been tampered with. If it starts getting tampered with, that gives the insurance company a reason to back out. Again, all they care about is making money at the end of the day. That's what they exist to do. They're going to try to find ways to get out of paying money. So don't give them that out. Make sure that you don't overthink it. Make sure that you don't give them a reason as you tamper with aspects of your house. Keep up with your house, but don't do unusual things that could cause your insurance company to say, you know what, you've tampered with this property and we're not going to cover you now. By the way, it's also worth mentioning, this is not a new thing, but and I believe I covered this on the first one that I recorded, but we've had a lot of flooding in the past couple of years. And flooding, as in like a creek floods and floods your house, that is not covered by homeowners insurance. Just FYI, if you are in a floodplain, you get flood insurance from FEMA. Well, through FEMA. I shouldn't say from FEMA, but through FEMA. That is what protects you against a flood. Your homeowner's insurance is not going to protect you against a flood. Odds are it's also not going to protect you against an earthquake. Again, look at your policy and look at those things. That's not something we run into a whole lot here in the upstate. Flooding is much more of a concern. But there are a lot of little things like that a lot of people don't realize. Oh, I'm not insured against flooding or earthquakes or those types of things. We mentioned civil unrest earlier, and that one's a tricky one as well because there are so many different exclusions that a typical policy has. They might exclude, for instance, terrorism. They might exclude, for instance, insurrections. Well, who defines that? Insurance companies have a gazillion ways of wiggling their way out of these things and saying, well, that was actually an insurrection. We're not going to cover you for that. That was actually terrorism. We're not going to cover you from that. Damage from war. Usually wars are not covered. So let's hope that we don't have, anything like that happening anytime soon. So when it comes to, if you feel like you're at risk potentially of civil unrest and damage to property due to that, you need to really look into your insurance policy, talk to your insurance agent, make sure that you're covered, see if you need to take any preventative measures to protect your property and what coverage there is for that. And do your homework. Make sure that you are fully prepared for that scenario. One more gotcha, and then I'm going to be done. I'm busy. I can barely squeeze this recording in this week. Properties that have been vacant for a long period of time. If you go on a trip, a nice long trip to Europe, you're out there for the whole summer, your house is vacant for 3 months, you get back, there's hail damage. Your insurance company may have something in there that gets them out if your property has remained vacant for a period of time. Look in your policy. It's not uncommon them to have language in there that says a vacant property that has been vacant for only 2 months. We're not talking about like a year, 2 years, or whatever. It may be a vacant property for just a couple of months that they're able to wiggle their way out of paying any claims during that 2-month period. Look at your policy and see what it protects you against. If you're going to be vacant for several months, if you're going on that long trip or whatever the case may be, or if you decided I'm going to buy a second home and the home that you've been living in is not going to be a home that you're going to be in all the time, that's a conversation you need to have with your insurance agent and make sure that your current policy protects you. The policies are designed in a way to assume that typically that they are always occupied. If you're flipping a house, that's its own special policy. That's going to be a vacant house. You have to have a special policy that covers you in that instance. I had a situation recently where someone tried to provide coverage on a vacant house as if it were a rented house, but it was vacant, being flipped. That can be a problem, okay? Because at the end of the day, you have a claim, insurance adjuster goes out there, they're going to be like, well, this policy says that this is a rental property. Who's renting this? This doesn't even look like it's livable. Well, okay, that is a bit of a problem. So make sure that you have the appropriate coverage for what you are actually doing with your property. If you change the use of the property, you probably need to change your homeowner's insurance in some way as well. That's it for today. I hope that was helpful. I'm not an insurance agent. So if you have any questions about any of this, of course you can ask me what my opinion is, but go to your insurance agent, ask your insurance agent, make sure that they are competent to answer the questions. Go to someone that's competent to answer questions that you may have. But that's it for this week's episode of Selling Greenville. I hope you guys have a great week. Till next time, stay safe.